Welcome to those of you just joining us, and welcome to the first ever RSPO North America Sustainable Palm Oil Dialogue. We'll be starting our session in about a minute or so. In the meantime, please feel free to answer the poll question that you see there. We'll be sharing the poll results shortly, right before we begin our session. Hello everyone again, and welcome again to the first ever RSPO Sustainable Palm Oil Dialogue. This is our fourth panel of the conference. My name is Cameron Plesh, and I am the US representative for the RSPO. Thank you for taking some time to answer all of our poll. Really great to see that looks like some of you are a little familiar with how this sector engages in sustainability. But it looks like a lot of you still have a lot that you're wanting to learn a little bit more about this. So this will be a great opportunity for all of you to get to learn a little bit more. This is the second of 3 days for this digital conference, which features a series of webinar sessions covering a wide range of important topics with a focus on North American stakeholders and how they can make an impact in sustainability. I'm honored and excited to introduce this session. This session is called Investing, Lending, and Engaging: The Impact of Banks and Investors. But before we begin today's session, a bit of housekeeping. All of the attendees are in listen-only mode, so only the panelists and the moderator will be visible and audible. However, we still want to hear from all of you throughout this entire session. So please type your questions into the questions box that you see in the menu bar on your right-hand side. We'll ask as many questions as we can throughout the session, but we'll also have a dedicated Q&A session at the end of the panel as well. So please let us know if your question is directed towards any of the individuals on the panel or if it's directed towards everybody. We'll try to get to as many as we can. And again, although this conference was intended to be in person, for obvious reasons, we're joining each other from all around the world. So please bear with us if there are any technical challenges, as you've already seen a few. This is new for all of us, and we're excited to still be able to bring this content to you. So with that, I'd like to introduce our moderator for the session, Mr. Gabrial Thoumi. Gabriel's a CFA and FRM qualified research manager in debt, equity, and commodity markets. He has over 15 years of experience with extensive technical knowledge on integrating scientific and ESG data into financial models to determine pricing signals and asset allocation strategies. He has led many successful global investment research programs and engagement strategies. A lot of that is stuff I don't know a whole lot about, but Gabriel and our experts today will help to make us a little bit more knowledgeable about all these topics. So Gabriel, thank you very much for joining us today, and over to you.
Thank you, Cameron, and thank you, RSPO, for the invitation to join everybody today. It's a real honor. I feel like I'm standing on the shoulders of giants. You know, we have a wonderful panel with Green Century Capital Management and with WWF and the work that Justin's done. And of course, the incredible work that so many of our peers and friends and colleagues in the audience have done, you know, from National Wildlife Federation to Aid Environment, Profundo, and Climate Advisors, and everybody else out there. So it's really exciting to be here today. And I look forward to a vibrant and panel with a lot of questions. Please keep your questions popping up, and we'll jump right in. So with this, you know, I'd like to say that on the panel we have Jessye Waxman. She leads shareholder advocacy for Green Century Capital Management around deforestation and palm oil. She's globally recognized as she's recognized as a global expert in the field and has had a lot of success around how to bridge the gap between civil society and capital markets in easy and executable ways that result in win-win. Then we have Owen Hauck. He's an economist and a commodity supply chain specialist for the Big Panda. Just great to have Owen here. Owen's done all sorts of work looking at whether it's palm oil or other commodities such as timber and cattle and various beef products that come out of the cow and soy, and it's thinking about just how can you overlap the different supply chain risk management strategies that the certifications enable corporations and investors to employ to mitigate risk. So he's also known as a global expert in the field. And then joining us is Justin Q. He's also a chartered financial analyst. He's an ESG analyst for a large European asset manager. He's here in his personal and as an individual today, not representing his firm. But previously, Justin had a distinguished career at JP Morgan and Fidelity, specializing in ESG. So real exciting panel. It's wonderful to be of service, and let's just jump in and help. Let's get some questions going. And so first and foremost, Jessye, what role does the financial sector play from your perspective in making the palm oil industry more sustainable? I mean, you really bridge that gap. Do you have any thoughts on that? I think you might be on mute, if you don't mind, or do I need to unmute myself? I can.
There we go. So thank you all for having me today. I'm really excited to talk to you about the role that the finance sector can play in addressing deforestation in palm oil supply chains and in other commodity sectors as well. So the role that the financial sector can play in making the palm oil industry more sustainable. So as a long-term investor in a lot of companies, we firmly believe and have been backed by a lot of research that demonstrates that companies that pay attention to their ESG, so their environmental, social, and governance-related risks, tend to perform better in the long run. So as we're thinking as long-term investors, we're looking beyond quarterly returns and we're looking beyond year end. We're thinking about how companies are going to be performing 10, 20, 30, 40 years down the road. And that perspective informs a lot of our engagement work when we're talking to companies in our portfolios and to key supply chain actors about their role in deforestation, what policies and procedures they have, the procedures they have in place to understand what their supply chain looks like, to understand where they're sourcing from, and to source from suppliers who are implementing NDPE practices. This is something that we're really trying to bring to our engagements and thinking in that long-term perspective. Green Century has engaged companies really across the value chain. We've started engaging companies on palm oil in 2012, looking at downstream companies with the idea that if the market demand changes for a product, they can have impacts all the way up the supply chain. So we started engaging companies like Kellogg's and Starbucks, and then started working with traders as well, Wilmar, ADM, Bunge, and others. When we talk to companies, we're really concerned about the risks, reputational, operational, market access that come from not addressing this pretty substantial climate risk, the ecological impacts of deforestation, and the social, labor, and other human rights issues that are associated with it. As investors, I think we're particularly uniquely positioned to talk to companies because we have a stake that civil society actors don't really have. Like I said, we are taking this long-term perspective. We want to be able to invest in companies for the long term, and we want to be able to ensure that industries and supply chains that are so integral to so many of the products that we produce as a society are around in the long term. So sustainability is not just about ecological sustainability, but it's financial sustainability as well.
That's very interesting. There's lots of ideas there to discuss in the subsequent part of the session, such as risk-adjusted returns and all sorts of stuff. So great. And Owen, so tell us how WWF is approaching supply chains from an economics perspective, and then the work that you're leading globally.
Yeah, thanks a lot, Gabriel, for the introduction. Just to quickly reintroduce myself, my name is Owen Hauck. I work with the World Wildlife Fund based in Washington, D.C. in a research capacity under a large program called the Good Growth Partnership. This is a big program that's funded by the GEF, the Global Environment Facility, that's working across production, finance, and demand to strengthen the sustainability of major supply chains like beef, soy, and palm oil. So in terms of what role we are kind of playing and what role the financial sector is playing in the palm oil industry, we know about 85% of all palm oil is produced in just 2 countries, Indonesia and Malaysia, and we know that about 60% of all palm oil is consumed within the Asia region. So I just want to call out Asia's financial sector as being a really critical lever here in the push for sustainability. Namely banks in Asia, which provide a lot of the direct financing to the palm oil industry. Very, very important actors here, but they still kind of lag behind Western counterparts in terms of the strength of their palm oil policies. Investors, whether either in Asia or the US or anywhere, also have a huge role to play here in terms of pressuring consumer goods companies in Asia, because these are big and growing users of palm oil that have not really been engaged as much on sustainability issues to date. So our sustainable finance team, which is based in Singapore, works quite a bit in Asia with Asia-based banks, asset managers, and asset owners to show that addressing deforestation is a really big part of mitigating climate change, and to really build their capacity in addressing deforestation in the supply chain through improved policies, engagements, and monitoring the commitments they're making as well.
That's very interesting in the sense, how there may be differences in advocacy and engaging across geographies. So Justin, tell us what it's like from the asset management side. You've had a lot of leadership roles, and what does palm oil look like from your perspective? And also, what do the other agriculture supply chains look like from your perspective?
Sure, Gabriel. Thanks for the introduction again, and thank you everybody for your time. It's been dark in my back because it's 7 p.m. in London, but we have a great day. So yes, as a manager, the role here plays quite similar to what Jessye has described. So we're not going to go through every one of it, but if I just sort of put into perspective that the roles can be played by both equity and fixed income, because there's a bit of a myth to say that fixed income investors don't care so much about ESG, but actually that's not true. And there's a difference between the roles they play. And the role for both investors play in terms of assessing ESG risk from before investment and after the investment has been placed, as capital has been allocated. And between equity and fixed income, the difference is that as equity investors, yes, we can engage with the companies we invest in before we invest, and also after you invest, just make sure that they are actually doing what they are doing, and also assessing the risk across the supply chain. From the fixed income perspective, at times you could be investing in a company that may not be very good in their supply chain, or if they be very good managing supply chain, or maybe they have a hiccup, you could be asking a higher premium next time when they do their second bond issuance, because companies do come back for more issuance in the future. So for the asset manager side, there is a lot of tools that we can play with, from engagements to voting, and also as fixed income, you can do more on the asking for more premium, or even putting more discount to the bond that they actually issued. I think maybe just a bit of a step back, Gabriel, because we talk about this as well in terms of, why as a manager, why do we even care about ESG? People talk a lot about risk management. So I just want to put something into perspective for just the audience, and because I saw the poll just now that some really know a lot about ESG that financial services play, but some is still sort of in the middle ground. So just put into perspective, we as an asset manager, we are stewards of our clients' money. We're not managing our own money. I mean, some of it would be nice to be my own money, but most of the civil society's money that's entrusted to us. So it's our fiduciary duty to make sure that we do two things. A, we don't lose the money they give it to us, because it's hard-earned money that they're saving for their future generations. B, we want to make sure that the money they entrusted to us are not out there to destroy the world, because what's the point of making amazing return when they retire, or for the next generation, the world is like a wasteland. So these are the two main responsibilities for us. So when it comes to assessing risk of not losing capital, if you think about supply chain, whether it's palm oil or any other sort of agricultural materials, or even raw minerals like copper or silver, we need to think about are there any disruption in the supply chain if you're thinking about from the upstream investment? If you're thinking from the producers themselves, would their assets be stranded? And then when we invest in banks, because we do invest in banks, you really think about what's exposure in their loans to some of these sort of sensitive sectors itself. So there is multiple layers that we need to consider, and it's not just a very simple thing to say that yes, you are a palm oil producer that is sustainable, you're fine. But actually, you really need to look through the whole supply chain, and sometimes it's not as easy as it has to be. And so it takes years of engagement with companies. And when companies don't do what they plan to do, and then back to my earlier point, we may vote against the remuneration of the company. We may do discount on their bonds, or we may ask for more premium from the bonds when they issue next time. So there are lots of tools that we can play.
That's excellent. You know, one thing I'm really curious, Jessye, from where you're sitting right now, you know, do you see similar conversations around the pandemic of COVID and its upstream supply chain disruptions, and similar supply chain disruptions around palm oil or soy and cattle? Do you have any thoughts on that?
So I think the thing that COVID has most brought to light in this work is the connections that deforestation has to public health, to supply chain security. Deforestation is associated with increases in zoonotic diseases like COVID is. You know, deforestation decreases the habitat for endangered species, or really just for all species that are living in those areas, and creates or increases the likelihood that humans and exotic animals are going to come into contact with each other. And that's how you can start to see the spread of new diseases that humans haven't encountered before. So deforestation is definitely associated with public health and diseases. Certainly, we've seen with COVID supply chain disruptions, how that has interrupted business as usual, to say the least. The impact that this is having on investing and looking at engagement, I think is not quite as clear. There are indications that, you know, ESG investing is going to surge as a result of COVID. I think as more investors understand some of these links and the importance generally of addressing ESG risks. And I think generally as things like climate risk and, you know, the greater understanding between deforestation and public health and other issues, these are trends that investors are going to start paying more attention to, will start engaging increasingly with companies with in their portfolios.
Yeah, that makes a lot of sense, you know, because we start to see E, S, and G are not separate from each other, right? There's a correlation, and from an operations perspective, E, S, and G are not separate silos themselves. You know, if I'm growing palm oil on oil palm trees, I don't think, oh, is this an E issue today? Is this an S issue today? Is this a G issue? It's an operational risk issue. So, you know, it's really, so they come together. We see that now in supply chain risk as it's been exacerbated or accentuated with COVID, unfortunately. So, Owen, I mean, there are many types of asset managers and investors out there that are pushing for palm oil use in emerging, pushing for regulation of palm oil use in emerging markets. How do you see national regulations and trade policy, maybe the EU deforestation policy or the new EU farm to fork strategy, or any number of other options impacting this international trade flows as they come out of the emerging South? In the case of palm oil, I mean the emerging markets in the global South, and they come out and they trade across the world. In the case of palm oil, 60% is consumed in Asia, but a significant, I think it's 12% or so is consumed in the EU. Do you have any thoughts on international trade policy and national regulations that you're seeing?
Yeah, I think this is a very important area to be concentrating in. You know, the whole issue of governance and trade governance really has some potential for impact here. Of course, you know, it does have somewhat limited impacts outside the main consuming regions, but we've seen a lot of progress in the EU with you know, various national declarations on imported deforestation. This has happened in the UK and in France now, not just for palm oil, but also for soy and other deforestation-linked commodities. So yeah, I would agree. It's very important to start looking at these issues in terms of the international trade perspective and even international trade agreements. You know, they're always subject to a bit of controversy in terms of, you know, how they're governed or the specific mechanisms for legal enforcement. But I'm excited to see that there's quite a bit of momentum here in terms of trade issues and these commodities.
Yeah, in the way that the international trade can be considered a wedge or certainly an opportunity in the other hand, right? And that's where, one thing that I know Justin and I have talked about at times offline is how can the international trade of deforestation related commodities become an opportunity set for countries and for institutions to work together. So I'm curious, Justin, from your experience in Southeast Asia, working in the region and in a leadership role, do you have any thoughts on how institutions and civil society between Southeast Asia and the global North and the countries themselves can start to work together, maybe on the regulatory perspective from the U.S. The Securities Exchange Commission point of view from the U.S.?
Yeah, I think absolutely. There is definitely something to be done in terms of more collaborative work, and it does help us standardization as well as we go through. Yes, we cannot trust standardization completely on sort of point blank perspective, but it is a base to start with. It's almost like if your palm oil is not certified to be sustainable by SPO, for example, what does that mean? Right, and if you do have it certified, it doesn't mean you guarantee that your supply is not going to be disrupted, but at least you have a better assurance from that, because we are not going to, as investors, to fly around the world burning a lot of CO2 to go and visit every sort of palm oil plantation out there to see. So some of this regulation will be quite good to set as a starting place. The second thing when it comes to standardization, the usefulness is that it becomes less costly to companies, and it's easier for company upstream to manage their supply chain. So for example, Nestle, yes, they will have to manage different sort of resources from different places, and then when the standards becomes different, it will be very difficult for the supply chain management team to actually start to managing this to have a consistent base across the board. So having collaborative work actually helps. And this is not only on palm oil itself. If I can say that, so the EU, as some of you may know in this space, is that the EU has launched this sort of dictionary called the EU Green Taxonomy to encourage more capital flows into green investment. Now, we all know what green you can define in many different shapes. Some of you may call certain things green, some of you may call it lighter green or even white. So what the EU has done there actually is creating a dictionary. And actually, interesting enough, to see what other people around the world has been doing. So Canada, for example, is going through consultation right now and then learning from the EU what they're doing. Malaysia, the country that I grew up with, obviously that's why Gabriel always joked about it, that you should know a lot about palm oil, is that they are also looking at consultation on the EU taxonomy. China is also looking at green taxonomy as well, because they understand the importance of air pollution. So I know sidetrack a little bit on this front, but this is one piece that you can see international collaboration can actually help us as investors to actually have a more consistent approach across the world and help us actually spend less time on trying to figure out what those legislation are, but actually spend more time managing our clients' portfolio.
Yeah, and what's interesting is that we find institutions and governments around the world borrowing, a bit from each other's frameworks. I mean, I don't know, maybe about a month ago, when Canada announced its what some people might call a stimulus, I might call a life support for its economy, because in the response to COVID and the subsequent economic impacts, that stimulus or life support, if you want to call it that, was tied directly to emissions reduction strategies. And so I think that's very interesting to see how we can see how institutions and governments are combining or borrowing ideas from each other. It's a lot of creativity right now around how to mitigate COVID risk and what that means from supply chains. Now, so Jessye, Green Century has been leading globally since 2012 on deforestation, and we're struggling. It's not a struggle that you're leading, but we're struggling to stop deforestation at the economy-wide level. The early warning signs already are for deforestation and fires in Indonesia and Southeast Asia to be quite high this year, and certainly in Brazil too. I don't know about the Congo Basin, but probably similarly. So we have all these companies out there with no deforestation, no peat, no exploitation policies. Why are the fires still possibly going to happen again this year?
It's a good question, and I think a tough one to place a single solution or a single answer on. In the last 8 years, about half the companies globally that have exposure to deforestation have made some level of commitment to eliminate deforestation in their supply chains. So this might not even be comprehensively. So let's start breaking down these numbers. So about half of them have a commitment. Some of them are only to one commodity. Palm oil gained a lot of popularity in the popular discourse on deforestation some number of years ago. So even half of those companies don't have what's called a cross-commodity commitment. Of those 480 or so companies, only about 72 are reporting annually and demonstrating progress towards implementing their commitment. So this is one of the things that investors think about when we're looking at companies. It's not just who has a policy, but who's implementing that policy and who is demonstrating that they are taking the steps to live up to the commitments that they've made. So one of the reasons is there's insufficient implementation. The lack of evidence or the lack of disclosure demonstrating progress suggests to us that maybe things aren't being made. I think that's one of the challenges. The second challenge is segregated supply chains can become really complicated, and some have argued that that can be slowing down progress. It's why there is work being done in different commodity supply chains to find alternative solutions. Working company by company in their individual supply chains is important. In order for companies to eliminate risks to themselves, they need to understand their own supply chains. They need to have traceable supply chains. They need to, be transparent about the work that they're doing. But the number of companies, like I said, there's still only half that have made commitments. European and US markets are much more ahead on crafting demand for sustainable commodities than other markets are. So looking at alternative solutions like landscape-wide approaches, jurisdictional approaches, creating partnerships between private and public sectors are ways that we're going to have to think about coming to new solutions to try to address some of these things like ongoing fires.
Yeah, so in that sense, so you specialize in engaging with many different types of people, from the board of directors to the C-suite and directors at Fortune 500 companies around the world. Jessye, what's that secret sauce that gets that engagement to work? What is it? Is it a Starbucks coffee? Or is it Rainforest Alliance Fair Trade coffee? I mean, when you sit down for coffee, or is it, what's the secret there? How do you get people to say, gosh, I gotta go zero deforestation?
So again, there's no one quick solution here. I think a lot of this comes from increased education, getting financial analysts and ESG analysts to understand the risk that deforestation poses to different portfolio companies and also to portfolios overall. The way that we talk about climate risk as a systemic risk, or climate change as a systemic risk, deforestation by contributing to climate change, by having ecological impacts like affecting precipitation patterns, by affecting biodiversity, have impacts on our portfolios overall. So one is increasing that education. Two is moving from the education phase to the engagement phase. Like Justin was saying, it's important to engage companies both before and once you are invested in the company to communicate what expectations are around sustainability and climate risk and long-term projections. And as more investors understand climate risk and deforestation risk, I think we're going to start seeing that happen. I think it's also worth noting that civil society actors do play a role. When we talk about reputational risk, this is definitely something that is a growing problem as deforestation becomes more publicly known, and as in some cases and in certain biomes, the risk of deforestation is becoming more dire. So NGOs are pointing to companies and calling them out, saying this is something that we really need to solve. So it's knowing the issue, it's engaging and communicating those expectations to companies across the value chain. So downstream companies, upstream companies, and the traders who are kind of situated at a bottleneck in the industry for a lot of these commodities.
Engagement and education approach is a long-term strategy. That's great news. So Owen, I'm curious, do you have any sense on how does deforestation risk fit into the broader climate risk conversation? I mean, our oil and gas friends have certainly had quite a year you follow the West Texas intermediate pricing, pricing of oil and gas, oil per barrel. Yet, you know, there's always this climate risk, but people never think of deforestation risk. You know, we have the Task Force of Climate Financial Risk Disclosure. Do you have any sort of wise words to help our audience, you know, go out there and really lead the fight? Owen, pardon me, I think you might be on mute.
Oh, I'm sorry about that. Can you hear me now? Can you hear me okay? Okay, great. So yeah, let me start over there. So that's actually exactly one of the approaches we take when we're engaging with banks and investors in Asia. We find that there are quite a few investors who are not necessarily ready to start engaging specifically on palm oil issues. So we try to frame the issue in terms of these cross-cutting issues like climate change, aligning financial flows to the Paris Agreement, and implementing the recommendations of the TCFD. So yeah, it really starts, I think, at the macro level of understanding what are the risks and what we're all trying to solve here, which is you know, mitigate and adapt to climate change, and understanding that deforestation is an integral part of that.
Yeah, it absolutely is. So so how, Justin, you're an asset manager. You're sitting there. You have to achieve risk-adjusted returns, and Jessye calls you up. How does that work? What's that secret from your perspective? So you're like, wow, civil society is really making a difference today in my approach to asset management, whether it's on the fixed income side or on the equity side. Are there differences, whether it's long-term investments or short-term investments, or in global north or global south, emerging markets investments? What's your secret?
I think the most important thing to start off with is to take a long-term position, which is what Jessye mentioned about, because we are not here to manage on a sort of high frequency trading or day trading firm, and that's not the organization I work with. The companies I've been working so far, all this time, has been managing people's pension funds or their savings over the long term, and that talks about 5, 10, 20, 30 years. So all this risk may not be very apparent in the sort of very short term, 1 month, 3 months perspective, but for the long term, it will be much more apparent. So that's the first thing about the risk side. The second thing is some of these things could be a bit like what we like to call it the black swan risk, i.e. the risk that could suddenly appear and then will have a detrimental effect, like the financial crisis. What does that? Where would that come from? So, for example, an agricultural company who decided to who's not having a sustainable palm oil in their business, their downstream procurement team may just go, you know what, actually, I'm not going to buy from you anymore. This is what happens to a couple of Japan consumer staples company a couple of years ago, to say that I will not buy any more palm oil from Indonesia unless you are registered as our RSPO. So that's one part of black swan. The second thing could be from consumer goods, consumer buyers like you or myself. So in the UK, there was a very successful palm oil advertisement in Christmas 2018. That wasn't meant to be out there, but it was meant to somehow leak on YouTube as an advertisement to raise awareness on palm oil, and that supermarket was quite packed with people after that. And that again triggers civil society to think about it in terms of do not want to buy any more goods from palm oil. And then 2 weeks ago, speaking to a friend of mine, she said she will never buy any cosmetic cream that has any palm oil in it. So there's a lot of this called black swan sort of aspect of it. So as an investor, it's good to see the civil society raises the point, and then if we start to think long term and also understanding any sort of short term spike on this, we start to wanting to make sure that the supply chain is as clean as possible and also without any disruption. I know you also talk about the point about COVID, which actually raises a really good question right now, because there's a lot of supply chain disruptions from COVID. Because most of the corporates I talk to today, they say that they don't really see it, but they see this as a long-term issue because of the globalization trade that we have. One thing that we have seen in terms of globalization is that every country becomes specialized in producing one or two things. And that's a big risk in COVID, as we can see, because you have sudden spike in certain countries, and then you suddenly will not have any more supply chain produce from those countries. And then you go, so what's going to happen? Do you go to another country? And back to your point earlier on about collaboration of standards, because if Indonesia is suffering from COVID, no one could actually go pick the palm oil or process it. Can we plant it somewhere else? And if we plant it somewhere else, can it be the same standard that Nestle can still buy from? So these are all the aspects that we always going to think about as a sort of long-term investors. And unfortunately, like Jessye said, there's no one size fits all. There's no silver bullet to the whole engagement. And we do rely quite heavily on what companies tell us and also what they disclose. But we also look into using some form of smarter data set, for example, using artificial intelligence to help us scrape some data. We're also looking at satellite images as well to see how the users make those things meaningful. We use consumer goods surveys to try to find out what's happening across the supply chain. So there's a lot of angle to come in place to do it. And actually, these are the things that only active managers can do as well, because if you're a passive manager, these are things you can't really do. So there's also this aspect of role investors to play in this aspect.
That's quite interesting. And that feeds into a lot of the work that Owen and your team is leading around traceability and transparency and around standardization. Do you see trends come up beyond palm oil? Do you see transparency and traceability standardization across other commodities happening that are mimicking or borrowing from the palm oil experience?
Yeah, I think absolutely that's true. In terms of specifically how the financial sector can start to really use these things to improve environmental outcomes, WF has developed quite a few different tools that are available to help really assess risk, get at ESG issues, traceability, and things like that, cross commodity. So one is called the Sustainable Banking Assessment, SUSBA for short, and this really tracks how ESG is being integrated among Asian banks. So this is a free tool, free to use by global investors and banks to learn from peer institutions and align where investors can align their own ESG strategies with prospective investments in these Asian banks. Another great traceability tool I'd like to give a shout out to is TRACE, which stands for Traceability for Sustainable Economies. This is partially funded under the Good Growth Partnership. It's TRASE. It's a free public visualization tool that's developed by Global Canopy and Stockholm Environment Institutes that really aims to provide this incredible level of detail, this visual detail covering 70% of the global trade in forest risk commodities. So talking about soy, beef, palm oil, but also like meats, poultry, et cetera, that are embedded with soy, linking the localities of production, so in Southeast Asia and Latin America, mapping through the trading companies and then to the place of import and consumption. So Trace is going to be launching something called Trace Finance, which is going to provide a similar level of detail, transparency to bank and investor flows. I think they're aiming to launch that in the next few months. So banks are going to be able to use this to screen for risks, screen their portfolio, conduct due diligence, not just in palm oil, but all types of forest risk commodities.
That's quite interesting, Owen. So a shout out, if you don't mind, for my day job where I'm at Planet Tracker. We have some pretty interesting data dashboards where we're linking seas risk and other related environmental risks to the salmon industry, so to the farm salmon industry, which is a very actually large industry around the world. I think it's about $30 billion in trade flows. So smaller than palm oil, but not that much smaller. And that's been very well received because it's another way of presenting the data to help share and communicate risk and also opportunity for institutions, investors, and civil society. So one thing, Jessye, that I'm really curious about, how do we get beyond just palm is about orangutans? Palm's also about people, and it's about indigenous people's rights and labor rights. It's about gender rights, which people don't talk enough about. These are really important issues. It's also about governance. So do you have any thoughts on how we communicate around agricultural supply chains beyond the actual, say, maybe environmental risk, if we use that catchphrase?
I think it's a really good question, and I think one of the places where this NDPE framework comes in, right? The D and the P, so no deforestation, no peatland development, right, has had a traditionally very environmental focus, but the no exploitation is a really important aspect of it as well, and I think is one that maybe doesn't get talked about as much, but is certainly there. When we look at companies to understand how it is they really are managing risks in the forest risk commodities. We're looking for, detailed policies on all of those things, but there's been, I think, a proliferation in what no exploitation means. So the RSPO increased those standards by looking at expanding or restricting uses of certain pesticides. We're looking to have ground truthing in some of the verifications, right? There's been an expansion of satellite monitoring, which is great to monitor deforestation, but doesn't really address the social issues that can be associated with either labor abuses, human rights abuses. So one, I think it is something that investors are looking at, even if we're not talking about it as much in public discourse. Two, increasing the public discourse around it, increasing education, I think, is always really good in understanding that, especially as issues around COVID and the economic situation or the economic fallout from the current pandemic are really highlighting some of the social impacts of either our current economic system or current supply chains. I think that's going to become more readily discussed among the public generally, but also among finance sectors. So to increase that dialogue, I think is something we're going to see.
Yeah, it's interesting because as we start to look at supply chains, we have transparency and traceability out there. We have overlap between palm oil and other agriculture commodities. We even have commodities in the ocean. If you want to look at farm salmon, if you wish to bore yourself with that, I would be happy. But we also, that all ends up ending up on the balance sheet and income statement. So one of the things that we have done at Planet Tracker is done a lot of research on actual financial accounting. And Justin, you look at the income statement, the balance sheet, the statement of cash flows, the financial statements, how companies report their performance. Do you see any agricultural impacts of misreporting and misapplication around accounting, or is that a risk that is considered from your fundamental analysis, bottom-up perspective?
Sure, Gabriel. I think this goes quite nicely with the paper that Planet Tracker has put out there recently, and I think increasing within Europe itself, I think that we've been having lots of conversation as well from the policymakers and also civil societies on how can we put a dollar value towards natural capital. And I think as of today, no one has really done that piece of work to actually quantify it. And I think that's one of the issues with this, because you cut down trees, you pay the value on the land, but no one actually to actually quantify or put some accounting value behind the cost that has been sort of impacted to this. And I think this is why on the balance sheet you don't really see this in a very obvious manner on terms of natural capital assets that you own, or it's not very obvious in when you look at the expenses of a company. What is the natural capital expenses from that perspective? People have done a lot of amazing job in terms of carbon footprinting, and they put a cost behind it. It's because there is a carbon tax. Whereas in terms of natural capital, it's not actually very well represented from that perspective. So I think there's obviously, in terms of having standards, which we talk about sustainable sourcing, I think also to get corporates on the further upstreams or even financial analysts, some form of dollar value in terms of natural capital will actually help to actually put a dollar to it. And then that is another tool that we can use on top of engagements and also voting pieces of work that we talk about. So once you put a dollar value next to something, it becomes real. And we have seen, we can argue about how successful the European emissions tax trading scheme goes, but it is something, and companies do trade on them. Companies do actually factor that in as they work through their working capitals on a yearly basis. So I think from a natural capital perspective, there's something that should be more consistent and also be looked into to actually make that into more of an accounting.
Okay, yeah, that's great. So we're going to start wrapping up right now. And so building on the concept of natural capital accounting and the dollar value, Jessye, what's one thing you want the audience to do today or the next week? Obviously, give you a call, reach out to Green Century Capital Management, but what is it that you want them to do today?
I think when we're talking about ESG risks, governance and understanding that addressing the environmental and social, labor, et cetera, risks in a business's operation and supply chains is really important as a business case. I think I draw a lot of inspiration from the story of the Lorax which may sound a little odd, but
no, me too.
I think it's particularly instructional. Gabriel, I'm
Yeah.
glad you share the perspective here.
Yeah.
Right, there's a business that's pursuing its interest, it's growing seemingly exponentially, and all of a sudden, you know, the production of the product that they're making has to stop because they run out of natural resources. When we think about what's happening in deforestation, there are reports that are talking about, I know more about the Amazon here, that there are concerns that the Amazon is starting to reach a tipping point, and some reports saying the Amazon has already reached a tipping point where there's so much deforestation that the ecosystem isn't producing enough rain to sustain itself, and it's going to start going into a downward spiral. When we think about the long-term risk to businesses, addressing sustainability is really important, so that we hedge against, you know, destroying the Amazon that creates ecological richness, that creates rainfall for agricultural productivity that's happening so much in that region. So one, it's thinking about that long-term perspective, and two, in thinking about that long-term perspective, adopting the best policies that we already acknowledge. It's working to eliminate deforestation in the supply chains, adopting NDPE approaches to the work. It's having traceability in your supply chains, understanding who you're sourcing from and what their policies are, and being transparent, since the finance sector and other stakeholders are really keen to understand how it is different companies are doing this.
Absolutely, I agree. I mean, that there's such interesting connections, sadly, but they're really important, between deforestation that then is linked to increased dust particles in the air that then impacts phytoplankton, which sadly phytoplankton is one of the other oxygen engine of the world besides the rainforest. You know, if you take a deep breath, some percentage of your breath comes from the Amazon. The other percentage comes from phytoplankton in the sea. So Owen, tell us what you want everybody to do.
Yeah, as a key takeaway, I would just say that there are a ton of tools and resources out there for banks and investors to start getting involved on these issues, whether it's forums like the Principles for Responsible Investing, or even the Ceres Investor Network, or tools like I spoke about a bit earlier, like Trace, like SUSPA, or even Global Forest Watch Pro, which is specifically designed for the financial institutions to start mapping these risks. I think that palm oil specifically has shown that it is possible to generate a lot of momentum around this issue, even if the issue itself and the underlying supply chains are quite complicated. So don't give up is what I would say. Persist.
Absolutely. And so Justin, what's your last 15 seconds takeaway for the audience?
15 seconds, so I'll try to do this quickly. So I'll just sort of address the sort of three groups. So first of all, anybody here who's from the finance or sort of asset managers or bank side, I think it's good to get together to work on these complex issues together, because you cannot solve the world problem on your own, and then don't try to be a hero in this space. We need to collaborate among ourselves. For anybody here who's representing corporates, I think it's definitely worth working with your investors and also your civil societies and your local regulators to find ways to make it more transparent, but also come with best practices and all the things that Jessye mentioned. And then for all of us, doesn't matter who we represent today, we are all civic society members, and we all have pension funds. The money that your asset managers manage for you is your money. You can tell them what you want to do. So I think we have this is my call to action. Is actually ask them, is my retirement fund or my savings exposed to deforestation? I think that's probably where you want to start, because you can go protest on the street as much as you want, but if you want the capital to move, you own the capital. So it's your right. And if you don't want to practice your right, then somebody else will do it something else. So that'll be my call to action to everybody.
That's a great call to action. And my final 2 seconds here are going to be: responsible sourcing is responsible sourcing. The opposite of that is irresponsible sourcing. So be responsible with your supply chains, because that's who we are. We're the adults in the room. It's time for us to step up, take charge, and own the risks and approach and engage and develop responsible sourcing today. So with that, I'd like us to pivot and thank Cameron and the RSPO, and especially all of you. You've listened in, you've shared your afternoon with us. We're really grateful. Justin, Jessye, and Owen are online at LinkedIn, or if you have their individual contacts, if you wish to get a hold of them, obviously you can just email me and I'll put you immediately in touch. Anything we can do to help you, just let us know. And thank you so much, and a really grateful round of applause, virtual round of applause. I guess that's a snap of the fingers to Cameron and Dan and the RSPO team. And congrats for leading the world and making North America a leader in RSPO.
And thank you, Gabriel. Thank you as well, Justin, Owen, and Jessye, for the very engaging conversation. And as Gabriel mentioned, feel free to reach out to me. I'll help connect you to anybody as well if you have any follow-up questions that we weren't able to get to. So thank you again to all of you for joining us today and participating in this dialogue. Again, if you have not registered for the sessions tomorrow, you can do that on the RSPO website under the events section. This session specifically has been recorded, and we'll share it later as well. And again, happy to connect with you to further engage in this dialogue. The sessions tomorrow will start at 1 p.m. Eastern. Again, you can register online. We're going to be talking about how North American companies can support smallholders and also how zoos engage companies and consumers to impact sustainability. So some more great conversations to end our final day of the North America Sustainable Palm Oil Dialogue. But thank you again, all of you panelists and Gabriel for being the moderator today. And thank you all of you for joining us for this dialogue today. And I hope we see you tomorrow. So stay safe and thanks again. Have a great day.